Tom Asprey with the Viper Report Market Wrap video for August 23rd, 2024. Now this picture has nothing to do with the financial markets, but it does have to do with the fact that I'll be taking a couple of weeks off, and this is a past trip. This is Mount Kachenjunga that I was fortunate enough to see a sunrise over from Darjeeling. Those tea drinkers are probably familiar with that, and travel is one of the great joys of my life, and I've been fortunate enough to do quite a bit of it. So, I'll be taking some new snaps in the next couple of weeks. Well, we got Fed Chair Powell's Jackson Hole speech out of the way, and pretty much went as planned in my view. A cut in September, didn't say how much, and market really liked what they heard. Though still, as we'll get into, there are a number of bearish people out there that think the market has formed a top, and though I'm open to corrections in the difficult September period, October period, I feel confident stocks will be much higher going into the year end. For the week, we had solid gains. The Dow up 1.3, NASDAQ up 1.1. It hit some pretty good resistance, and so it sort of stalled. S&P up 5. It's still slightly leading the Qs. That's likely going to change in the next couple of weeks. Transports rebounded, but are still very weak for the year. Those on the bearish camp will say, well, this is an economic indicator, and it's not doing very well. Utility average was up slightly, but had a great year. And gold also was flat, but it's also done very well. Leading the market was the small caps. Very strong close in the Spider Trust SPY, which tracks the S&P 500, had a high of 563.18, and then closed at 562.13. Looks like it heading back up towards its Stark band, which is around 577. We've been talking about fib targets in the 580 area. Those people who are not positive in this market really don't look at the advanced decline line, or they don't mention it anyway, but it's been a rocket ship here lately. You can see the sharp rise in the S&P, and stocks only, which is often a lagging. It's doing great, as is the NYSE All AD line. So, they're getting overextended. You can tell, the gap between its moving average, but, that allows for a pullback, but certainly not warn of an impending or a significant top. The upward acceleration is even more clear on the daily chart. You can see the NYSE was up 1.3%. When people complain about the market not being broad enough, that is a great sign, because it was leading the S&P, AD line, S&P, and both the New Yorks looking very sharply higher. They've broken out to new highs, so they're already pointing to new highs for the major averages. The daily NYSE All also looks great. One of the complaints from the bearish camp is the fact that the VIX and the VXN surged to massive levels here at the start of August. You can see up around 65, I think was the intraday high. They're back into downtrends. Certainly both could move slightly back above their moving averages, but the peak alone to me is not a bearish sign. So for this to turn bearish, you would want to see the VIX start to move above its moving average, start a new downtrend like it did in here, which was, we alerted you in past videos that was a problem for the market, and the carry trade blew up. It was a good warning. Put call ratios, they've jumped up at the end of the last week. We had 1.3 on the total put call here, and 1.6 or so on the index. Back to under one. So they're rising back up. This on Friday's data, 29% roughly more puts were purchased than calls. So they could be right for a while. You look at the 20-day moving averages for these markets. For the S&P cash, it's 54.98. So, quite a ways above or quite a ways below the current market level. The past few weeks we've been talking about the yen, and of course this plunge here, dollar yen. So when it's falling, the yen is getting stronger, 155 down to 141. This looks to me like a classic continuation pattern, similar to what we saw up here. So we broke that around the 19th, and the yen has been strengthening, since that time. So far the markets really haven't reacted too much. If somebody acts in terms of moving their rates as a result, that might get the market's attention. Not really clear if there's a big carry trade position still out there or not, and we'll only see if we get down, under 140 yen, then they may be forced to liquidate some stock positions. On a short-term resistance, you can see we're getting close to the R2 resistance, the pivot resistance at 564.83, and then we have 578.85. Support down here at the pivot, 551. And now the 20 period in red is crossed above the 50 period. That's often a pretty positive sign. So, and of course the daily AD line, is quite strong. The QQQ formed a pretty significant reversal, I think, on Thursday. New high, lower close, and a close back below the pivot. Stabilized up 1% on Friday. So, it's the AD line looks really strong, but nevertheless it could pull back to its rising moving average, and a pullback in the Qs down to support here between, around 558, to 564 or so. Of course, we have NVIDIA's earnings coming up this week ahead, and, depending on what they are, if they come in weaker than expected, the Qs will bear a brunt of that selling. RSI, kind of neutral. We had a pretty good rally here, so to complete a bottom, we would like to see, even if it pulls back a little further, in a week's time, it should be back above its moving average. We talked about this last time. You can see another really bullish sign, from my opinion, is all these dark black bars here are showing very strong advancing over declining stocks, high percentage, 60% and up for the S&P. Also, the final reading for the small caps, 85% of the small cap 600 were higher on Friday. Also positive pattern here. Similar strong buying, in early May helped kick off the rally from the May lows, and we think it's equally positive or even more positive now. Anyway, I see composite, nice sharp move, and the new number of new highs to 294. Only 6 new lows. That's a good sign. You'd like to see the rally continues. You'd like to see a move above this 400 level. If we look at the NASDAQ, also up to 300, but still well below this peak, and a downward trend in the new lows. So we want to keep that downward trend. This is the Diamond Trust, tracks the Dow Jones Industrials. You can see it also looks pretty bullish. It's not beating the S&P indicated by the RS here, but look at the AD line and the volume. So, 417, 4170, 4270 are the pivot levels for the month. The IWF, IWD, that's the growth value ratio, was a bit lower on the close, but it did close back above its moving average here. So still looks to be a pullback and overall uptrend. As I mentioned last time, a drop back below this low would raise a few question marks. For the week, the market internals were quite strong. This is one of the pages I usually direct my students towards, something, encourage them to, after they've been through coursework and several, they start to write down their own opinions of the markets and analyze the data that I've, emphasized to them. I think is quite important. And this is one of those pages, so you can see the NYSE, 2303 advances, 584 declines. So, almost 4-to-1. NASDAQ, better than 2-to-1 positive. And new highs on a weekly basis, much greater than new lows. So, those of you who are maybe even retired, and you want to think about jotting down your notes. When I was a biochemist, that's how I transitioned my career. Before we get into the watch list analysis, you can see the calendar for the next couple of weeks. Durable goods. You want to look at numbers that if they come in, disappointingly weak, then those people who are still worried about a recession are likely to point to that the economy is declining too quickly, which is still the view of many. So consumer confidence on Tuesday, it was over 100 and expected to be over 100. So you wouldn't want to see us drop well into the 90s there. Jobless claims is still an issue, as is the GDP revision. It was 2.8 last time, so as long as it stays above 2, should be fine. Next Friday, we get the PCE index and the month-end reading for consumer sentiment. So, they were a little weaker in the middle of the month. And then as we get into September, we have ISM, ADP unemployment, and the unemployment report on Friday the 7th. Of course, Monday is the Labor Day holiday. A number of new weekly buy signals in the ETF list here. AIEQ, ARKK, RAW Cloud, EWY, that's South Korea, FDN, that's the Internet, video games, IPO, midcaps, silver, the 3 times leveraged long, SPXL. This is a chart of the SPXL. Was going out in tomorrow's sector analysis report. You can see the sharp drop in the 15th, well below the Stark band here. You can see the little dot. We had a couple of them, so it's getting pretty oversold. Classic rebound in a downtrend. You see it got just above the 20-day moving average. So, that was declining basically. And then we got the new buy signal here on the, I think, the 13th or so. And it's been a pretty good move up to that point. So 160.87, is a pivot resistance level that we're keeping an eye on. Volume is picking up. Stochastic confirmer also point higher still. Support, coming back into this gap here, 144, down to 142. So the overall here, 76.9 bullish. That's a good strong reading. It was below 50 not too long ago. Growth gauge 100%. XLK is the only one that doesn't have a weekly buy. Value gauge taking some hits. XLE, of course, and XOP, VD, all the energy ETFs are not doing well, but we did see some positive action on Fridays. Daily DTS, so that may or may not lead to a 3 DTS buy signal in the week ahead. So long ETF still still favored, that's for sure. So this is tabular formation, looking at what's happened in the past since the end of June in the various sectors. So you can see for XLE was 75% at the end of June. It's been drifting lower. These numbers and look at all the readings pretty much have kept me from, sticking my foot into the energy area, which I've done a bit too much of in the past, and I'm happy to be not in there right now, but, their time will come. XLB had a really good week. It was one of the top sectors for the week. XLI also performed well, but it's a pretty low number here. So, We'll look at that in a second. And then, XLK got down to 8.3 in early August as the market was bottoming. Now it's 75%. Holding firm, I really thought we might see a pullback in the utilities or the REITs here. We're holding a couple of REITs in the Viper stock service, but still very strong. So here at the sector report, you can see energy. PXD is about the only bright spot. MPC, CVX gave a daily positive signal, but not a lot. Materials, I said, had a good week. So chemical companies doing pretty good. PPG just flipped to a 3-day, as did CTVA. So you might look at those charts. GE down in the industrials also is looking pretty bad. CAT, was the leader late in the week, and you can see that's confirmed by, the technical studies, though the 3D has not flipped positive. So railroads, maybe the strike thing is over. United Pacific, CCX, consumer discretionary, bookings, and Nike, but a kind of a mixed 75% though, overall positive trend. Staples, 91.7. People don't shy away from this, but the recent action and the fact that one of the Vanguard consumer staples had up gaps on a daily chart, highly unusual. Healthcare, I'm looking at that, and as well as there's some, I think the biochem, biotech area going to the end of the year has some really good possibilities. Financials sort of mixed. We have Bank of America, of course, was being dumped by Buffett. That was not taken as a positive thing. A couple of the other, Morgan Stanley also, some 3-day and weekly DTS. Information technology, you can see that Intuit, of course, got hit hard. If you look at good old NVIDIA, did a 4-hour positive sign on Friday. It had a pretty hourly top formation on Thursday afternoon, but it's rebounded. So, heading into earnings, I wouldn't be buying it up in here, though, you can't rule out another 10%, spurt on its earnings. It's been known to have them in the past. Communication services, also sort of a mixed bag at 66.7. And then utilities, real estate, both very strong. Looking at the themes report, you can see the retail gauge here. Target performed better than expected. Pretty much mostly positive here. Dollar General here is not. Amazon, tried to rally, but it's sort of a mixed bag. Chart-wise, it looks like if it gets above 82.50, 182.50 or more, it probably will turn. Hotels and leisures 33%. Going down into the aerospace, still looks strong. Oil and gas, you can see what a mess. So you look starting to is CVX something happening there, or just a oversold bounce. And in the largest large Q, it's sort of like consistent with why the Q sort of stalled out late in the week. We have Microsoft, Amazon, -3 weekly and below their quarterly pivots. Google, same thing. Broadcom has got a 3-day positive and a weekly negative. So and the Dow largest stocks is their AD line looks strong. So Goldman Sachs flipped a daily buy on Friday. Caterpillars, we mentioned earlier, looks great. So we want to have videos for the next couple of weeks, and I won't put out something before I leave. If you want to find past articles, Forbes: Tom Asprey, you can see what last week I talked about. Two markets that looked like they were completing major tops, and you can see this could be a head and shoulders top in the 2-year yield. Broke the neckline here, and if we rally back up to the neckline, that would not be surprising. MACD pattern here is pretty poor, and so then we drop back below 3.5%, we could go down into the 2.5% range. And also in the dollar, you can see this weekly chart. We dropped quite a bit last week below the support line C, and that projects a considerable weakness in the dollar. Typically, that means is consistent with the lower yields, and will also should be supportive for the growth stocks. And as I pointed out, the AD line from this was heading into last week was sending a really bullish message, and the market performed. So hope you have a good few weeks in the markets. Any questions about the video? Tom@viperreport.com, but don't expect an answer back for a couple of weeks. Thank you for tuning in.